Cryptocurrency regulation is finally becoming a reality. The Genius Act is set to begin its implementation phase in just 10 days, specifically on July 18, 2026, which marks the federal deadline for regulators to release their final rules. Most of the proposed regulations have already been drafted throughout 2026, with comment periods now wrapping up. Looking further ahead, January 18, 2027 is when the act broadly takes effect and stablecoin issuance restrictions come into play. Then by July 18, 2028, all exchanges and digital asset service providers must fully comply or stop offering non-compliant stablecoins altogether. This is not just talk anymore. The framework is being built right in front of our eyes. Adding to this momentum, more than 200 companies and organizations have signed a letter urging Senate leaders to bring the Clarity Act to the floor. Senator Tim Scott came out strongly in support, saying this legislation brings digital assets out of the shadows and into a system that is safer, fairer, and more transparent. Senator Kramer also sounded the alarm, warning that America cannot afford to let the digital asset industry move offshore. The guardrails need to clearly separate commodities from securities and traditional banking from non-traditional banking. The Clarity Act has already passed committee, and the floor vote is the next step. We simply did not come this far to stop now. Now shifting over to what is happening with Michael Saylor, Strategy has just announced a purchase of $101 million worth of Bitcoin, bringing their total stack to 845,000 Bitcoin. This week alone, they bought 1,550 Bitcoin at an average price of around $65,000. Earlier, they had sold just 32 Bitcoin before turning around and buying 48 times that amount back. Saylor keeps making these moves, but it is worth remembering his history. Back in the early 2000s, his company had to restate its financials for 1998 and 1999 after it came out that revenues and earnings had been materially overstated. What was reported as profit was actually a loss, and the fallout cost him $6 billion in a single day. Personally, I do not think his track record warrants blind trust. That said, I do not want to see him offload a massive amount of Bitcoin either, because this market is still heavily Bitcoin-driven, and a sharp drop in Bitcoin drags everything else down with it. Now let us get into what is really exciting for XRP holders. The global crypto market is sitting at around $2.9 trillion today, and XRP is up roughly 4%, trading around $1.17. The overall sentiment is still in extreme fear, but that does not change the bigger picture. XRP is the future of finance, plain and simple. Just as SWIFT built the backbone of global financial messaging, the XRP ledger is being positioned to serve as the bridge for global liquidity. With tokenization now actively reshaping how bonds, stocks, deposits, and commodities are handled, the asset connecting all of these markets together will become absolutely essential to global financial infrastructure. That asset is XRP. The DTCC has announced plans to pilot tokenized securities trading in July, with a full launch scheduled for October. This is not speculation anymore. This is documented and confirmed. This is the kind of development that will reshape this entire market permanently. Now let us talk about why so many in the XRP community believe a massive overnight price move is coming rather than a gradual one. The Shane Ellis Theory has been circulating since 2018, and it centers around a sudden, explosive price surge driven not by hype, but by extreme supply and demand imbalances. The argument is straightforward. Centralized exchanges currently hold very thin order books with limited XRP liquidity. A single aggressive buy order could wipe out all available sell orders on one exchange, causing the price to spike exponentially. Arbitrage bots would then kick in across other exchanges, trying to close the price gap, and this chain reaction would pull the global XRP price upward dramatically and rapidly, potentially within a single overnight window. This connects closely to the Fix theory, which we have covered previously on this channel. Will Fix argued that because Ripple had spent years in conversations with major global institutions, pricing would have naturally been part of those early discussions. XRP works most efficiently at higher price levels, where slippage and volatility are minimized. So institutions that engage with Ripple early on would have understood where the price needed to be for the technology to function optimally at scale. Will Fix believed this meant the price move when it came would not be gradual, but sudden, triggered by the moment everything went live, including DTCC involvement, regulatory clarity, and trillions in global liquidity moving on-chain. One element of this thesis that most people miss is the importance of the public float rather than total circulating supply. What truly matters is how much XRP is actually sitting on exchanges and available to buy. As institutional adoption grows through cross-border payments, ETF vehicles, and Ripple-powered settlement solutions, demand would quickly overwhelm the shallow liquidity currently available. None of these tokens are being used at mass scale based on utility right now, but everything the DTCC and regulators are signaling tells us that is about to change in a very big way.